In our brokerage, we pretty much operate like any standard brokerage agency that you'll see here in Los Angeles. The only difference is that we hyper-focus on investment properties and we build relationships from coast to coast to find deals that are not necessarily in California, but in growing emerging markets. I started by working with various REITs and institutional funds that used to raise capital for various asset classes, ranging from multifamily, retail value add, shopping centers, and even student housing projects. And in hearing these presentations and underwriting methods of how these different REITs and syndications raised capital, it allowed me to get a firm grasp as to what different asset classes there are in commercial real estate and what geographic locations these specific assets were located. And then finally, what the upside or what the execution would be in order to increase value for an investor. Again, the million-dollar question is, what market would you invest in today given the rising interest rates and the decreasing cap rates and compression of these specific cap rates in various markets? One market I'm very hot about in 2022 is Indianapolis, a market that's done very well for us over the last 7 years. So why Indianapolis? Well, number one, it's a pro-landlord state. Number two, it's top 25 in terms of population density. When you have a large pool of tenants that can sign a lease on any given day, that's actually very helpful in maintaining high occupancy and having a lot of tenants that you can screen as potential candidates for your property. Number three, there's a lot of things driving Indianapolis, whether it be sports or collegiate tournaments. You have the Indy 500, you have the professional NFL team, the Indianapolis Colts, the Indiana Pacers, and you have 22 universities surrounding this MSA that make this a really large college town, and you cannot book a single hotel room when any of these sporting events or conventions are happening at the same time. My own personal experience in Indianapolis happened about 6 years ago when I started investing in single-family homes there. At the time, we were buying homes anywhere between $80,000 to $120,000 per home, which doesn't seem like a lot when you compare it to California prices. And every single one of those homes are generating anywhere between 8 to 10% cash flow. Over the course of the last 6 years, we've brokered well over 300 of these Indianapolis single-family homes, and now are starting to pivot into something that's a little bit more creative and a little bit more luxury product, and that is Airbnbs. This is a product that I got started early last year. I'll admit I was a little late to the party and a little skeptical at first with the transient nature of just tenants and having to deal with so many of them, which went against what my initial investment philosophy was, and that was to kind of get rid of the terrible T's, tenants, termites, toilets, etc., and go into something that was more passive and in the triple net world. Nevertheless, once I got started into the Airbnb space, I fell in love with it. Number one, my cash flow was nearly triple what I would be experiencing with traditional single-family rentals. And on top of that, which is the most important component and element into Airbnb investing, is that I found in a needle in a haystack, the best property manager I could possibly ever find. If there's an event in town, we know about it weeks in advance, and to ensure that our investors are maximizing anytime there's a hot ticket in town. And how that translates to yield? Well, let's just say an average Airbnb that we have in Indianapolis rents for anywhere between, $180 to $250 a night on a normal day. But if it's the Indianapolis 500, for instance, which is the largest city in America and Indianapolis's biggest sporting event by far, we are actually able to increase our daily booking rates over $1,500 a night. At $1,500 a night, not only do I cover all of my expenses practically in one night, I have the rest of the month to recoup through the Airbnb space. Getting into the details, having systems in place, having concierge level service. We have virtual assistants that work 24/7 around the clock so that when the guests check in, they truly receive a concierge experience. And so currently we have over 120 Airbnbs scattered throughout Las Vegas, Scottsdale, Joshua Tree, Indianapolis, and Albuquerque, New Mexico. But Indianapolis continues to be one of the strongest cash flowing Airbnb products that we have. So as it comes to design and furnishing, a lot of people tend to spend too much on their Airbnb. I get it, you want to create like a hotel-like boutique experience, but when you take the acquisition price and you overspend on furnishings, what ends up happening is that it doesn't really translate in terms of return. Rather than overspend, I like to find things that actually move the needle and are effective without going over budget. And so our design team is well versed in doing that. We take all of the relationships that we have from wholesalers in terms of the furniture and finishes, And then from there, we're able to handpick and source items that are not only tasteful, but also effective and doesn't really, break the bank in terms of pricing to get everything set up. And all of that is done in-house. So the investor experience is this. I get a call and an investor says, "Hey Eddie, I'm in the market for an Airbnb property. Can you search for me? This is my price point that I want, and this is the specific market that I want." From there, I'm pounding calls like any other broker would, whether I use my off-market relationships or I find properties online and I negotiate hard for them on their behalf. Prior to removing contingencies, we'll do our due diligence and our underwriting and making sure that this property cash flows, and I'll put them on a matrix and give them sort of a threshold as to what the floor is and what the ceiling is in terms of cash flow. I always use the floor because if it checks out using my stress test and using the floor cash flow pricing, and if that all is good, I like to underpromise and overdeliver, and the investor gets a good experience on the back end. Once we remove contingencies, meaning once we know that we're gonna close on this property and all that's left is just outstanding paperwork and funding, our design team gets tagged in. They source all of the items ranging from couches, chairs, appliances, tableware, plateware, etc. And then they're able to stage and design in literally 2 weeks. We'll get professional photographers out there, and then we'll list the property in one of our 4 Superhost accounts to make sure that you hit the ground running and you get maximum exposure on your Airbnb listing. From there, the investor gets their investor portal set up. All you have to do is literally click on one link, and then you'll see all of your bookings for the entire year, so you can track it easily through your phone or through your computer. At the end of each month, the property management company offers you a statement. They'll show all your bookings, all of the expenses, and then you get your cash flow distributed within days after receiving your statement. Probably the most compelling reason why I invest in Airbnbs and why the investors invest in Airbnbs, outside of the versatility and being able to stay in there anytime I want to, is obviously the cash flow. In this marketplace, with cap rates compressing every single day and interest rates going up and people really not knowing where prices are going given the high interest rates, I know one thing is for sure, and that is I'm gonna get strong cash flow in the short-term rental market. What does the average cash flow look like in Indianapolis for us as investors? Well, to be honest with you, it hovers anywhere between 10 to 20% plus net for any Airbnb product that we have over in Indianapolis. If I have a 10 to 20% cash flow, and even if my interest rate's in the 6% range, which is very customary in 2022 for the average investor, I am still gonna get double-digit cash-on-cash returns in the teens plus, and for that reason, I love these Airbnbs because, again, average cap rate here in California is anywhere between mid-2s to 4%. I'm essentially activating my capital anywhere between 2 to 5 times the return. And that is why I'm so bullish on Indianapolis. We got that low price per square foot element. We got the strong cash flow. We got the growing emerging market and delivery of new construction, and also the pro-landlord state. For all of these reasons, this is the perfect storm for our investment today. Essentially, the passive investor really doesn't have to do anything. We like to set up our investors for success outside of when the transaction has occurred, and we continue to keep relationships with all of our clientele because they're relying on us to deliver a good product. And as a brokerage, this is what makes us sustainable. We enjoy going to different markets literally every single month and doing our due diligence and finding out what's next. And so give us a call. You know where to find us. We're on Instagram, YouTube, Facebook. Visit our website, and we'll be happy to share with you some of our discoveries and what our investors are getting their hands on in this current market in 2022.